sure about this recording. Actually, So let's see what's on the calendar for this week. Is there anything that, and obviously you guys know me, I don't really pay attention to the economic calendar unless if it's non-farm payrolls, which doesn't really bother me because I don't trade on Fridays, and interest rate decisions. That's the most important thing that I look for on the calendar. So you guys that are just joining, obviously I just started this live stream a few minutes ago. So far there is no trade on the horizon for me. Obviously as you can see, I've got my limit order on the chart, and yeah, we'll see if we're gonna get there in the next couple hours. If not, then I will probably be streaming the US session at around 1:30 UK time. But in the meantime, we're probably gonna have a runner strategy on the pound yen. But obviously, that market still needs to move about 50, 60 pips in the next couple hours for me to get that trade. Um, and also, I'll be doing just a few analysis this morning just to look at other few currency pairs. But in terms of day trading, this is my day trading currency pair, and I'm only gonna do day trading on this live streaming. So yeah, in terms of day trading, this is the only thing that has the possibility of a trade today. Um, but that needs to happen in the next couple hours. But we'll see. Even if I don't get the trade, then I'll probably be streaming the US session as well. So welcome to the live stream. If you do have any questions, guys, just put it on the live chat, and we're gonna go through it. Anything relating to trading, whether you want me to analyze a particular currency pair or just talk about a particular strategy, or yeah, just anything that's on your mind. I mean, you can't wake up on a Monday morning starting forex and you don't have things that are going through your mind in terms of what you want to know about trading. So um, yeah, so definitely ask away, and we're gonna look at some currency pairs and do some analysis, but that is not going to be for day trading strategy that I use. But maybe there's some of you guys that might be in a particular trade and you want to kind of a helping hand in terms of knowing which direction the market is going to go to. So I'm going to start with the euro dollar. I've already kind of, in my weekend video, I talked about the euro dollar in terms of the potential path that this market is going to take. And I think we do have a 1 2 3 contraction here. That's where you can see the box here. We got a 1 2 3 contraction, and the expectation is this market is going to come back down to somewhere along the middle of the line and middle of the box, and it's going to find some sort of support. So if you guys are trading the euro dollar, if you're not in the trade, then you might want to wait for the market to come back down to somewhere along the middle of the box. That's where you're going to be trading. And for those of you that are in it already, I mean, you probably would have taken your profit somewhere. That would give you an opportunity to re-enter the trade. This is a classic 1 2 3 contraction. For those of you guys that have taken my course, you know what a 1 2 3 contraction is, and that's what we've got right there. And with this contraction, like I said, the market breaks out of the contraction and then it comes back down to the middle of the box, and that's where you want to be taking your trade, because that's going to give you a better risk to reward ratio. Because your stop loss only needs to go below the previous structure, 10 20 30 pips or whatever, and you can have a first target at a previous structure here, which is already going to give you a risk to reward ratio of 2 to 1, and then you can even have an extended profit at around the 127 extension of this move. Yeah, so somewhere at the 127 extension. So in terms of this being a very good trading opportunity, it definitely is in terms of risk to reward ratio, but you will have to wait for the market to come back to the middle line of the box, because that is how you trade 1 2 3 contractions. But it's going to take a lot of patience, obviously. I mean, today being Mondays, I mean, sometimes Mondays are quite funny because you're not really sure how volatile the market are going to be. Sometimes Mondays are usually completely dead, and then obviously the market starts waking up on Tuesday, Wednesday, and Thursday. I mean, historically, those are the days where the average pip range is quite high. I mean, Tuesdays, Wednesdays, and Thursdays. Mondays are 50-50s. If you're familiar with trading, you would know that. So we don't know what we're gonna get today. Obviously, I'll have a look at the economic calendar in a minute, so that we can have an overview in terms of what's happening today. Maybe that is gonna provide us with some volatility. But yeah, so in terms of trading opportunity, like I said, this on the euro dollar, we do have a potential 1 2 3 contraction where we expect the market to come back to the middle of the line. That's what you're going to be placing a trade, but this is not going to be a trade I will take, because I only stream day trading, my day trading strategy on this YouTube. But however, there's going to be people who would want to take that trade. That is a very good trading opportunity. So heading over to the pound, The pound US dollar. This one is a bit of a tricky one because I actually, spoke about this in my video that I did over the weekend. So this is a classic channel contraction. As you can see here, we've got a little channel here in the market. And normally, every single time, I mean, normally the markets do break out of this channel on the upward direction, and I spoke about this on my video 2 weeks ago, that you should wait for this break, which is gonna happen. And obviously, if you miss that trade, then yeah, now you have to just kind of try and focus on what the market is gonna do next. And with this type of contraction, this is very, very hard to trade, because the normal person will look at this and tell you definitely that this market should be going up. Because when a market breaks out of a contraction like this, out of a channel contraction, what usually happens, I think when I made my video, I gave you guys two different diagrams, and I said, if you don't understand what the market is going to do, so we have a particular contraction like this, where the market breaks out of the contraction, comes back to the previous structure, and then it rallies. And we also have a different type of contraction, very similar. The market breaks out, come back down, break the previous structure, and then goes in the other direction. Now if you can't look at these structures and know why the market behaves differently, I said you shouldn't be trading, because this is a classic example of understanding the language of the forex market. Because this is like, I mean, obviously the major difference that you can see looking at this structure, if you don't already know, if you're in this live chat and you don't already know, the obvious difference is this point in the structure. That's the obvious difference. And what's different about this? The market breaking this structure when it comes out of the contraction, that creates a bullish structure, with this being the outside return. And if you know the rule of the bullish structure, the market cannot break the outside return, because once the market breaks the outside return, that is a signal that this market is about to change direction. Whereas in this case, we did not break the outside return. We did not break the previous structure, which is going to be the initial structure high. If you're looking at this as a bullish structure, this is the initial structure high. This move out of this contraction does not break the previous structure. So any move back down is only going to form a bigger part of the outside return. So that's why most of the times when you see structures like this, that the market breaks out of a contraction without breaking the initial structure high, the market will almost most likely go in that direction. Whereas looking at the structure like this, hi Samir Ali, I can see, guys, yeah, if you do have any questions, just put it in the live chat, and anything relating to trading, analysis, questions you may have. Obviously, I do live trading streaming on here, but I don't have any potential trade that I could be taking today. I mean, the only potential trade could be on the pound yen, and we're gonna look at that in a minute. Oh, amazing, amazing! I do have some Indian friends here in the UK. Yeah, so do you have any questions on trading? Anything that you want me to go over, just put it on the live chat, guys. But as I was explaining, so the difference between these structures is very, very important, because if you don't know the difference in these structures, I say do not even trade. Like, just stay away from trading, guys, because this is one of the classic, I call it language of the forex market. Technical analysis is language of the forex market, and if you don't understand structure, we're going to look at some examples and you're going to see how the market behaves. 9 times out of 10, if the market forms a contracting channel and breaks out of the contracting channel without breaking the initial structure high, it's going to come back to the previous structure and the market is going to rally. Now, this is more like 50-50. If the market already breaks out of the contracting channel and goes above the initial structure high, then this move down should not go beyond this level here, because if it does, then it breaks the outside return. You know what a bullish structure is. You know the what's it called? You know the rule of a bullish structure. So if the market breaks out of this and comes back to the previous structure, breaking the previous structure completely invalidates the bullish structure, because that is a sign of communication. And when the market does that, effectively this become 1 to 3 as part of a trend. The market breaks the previous structure. Of course, 9 times out of 10, when the market breaks the structure, it doesn't just go in that direction. It will retrace. It always does. So you get the retracement, and then the market moves in that direction. And this is what we're seeing right now. If we look at the pound US dollar, I said this in my video over the weekend. We got the contraction. We got the impulse leg, right? Let's go up a little bit. So we got the impulse leg. We're getting the contraction. We got the break. And did the market break the initial structure high? Yeah, it did. So now, after breaking the initial structure high, you don't expect this market to come below this level. Now, if this market is to continue being bullish, which the market is, I mean, if you look at the market if you zoom in, you're gonna see that we're completely bullish. Now, this is how you, as a trader, as a technical trader, as long as the market stays above this structure, because you have to remember, now you're looking at this as a bullish structure. I need to change that color a little bit because it's, now you're looking at this as a bullish structure. And when you look at this as a bullish structure, having this as your starting point, where's my, I'm just gonna abbreviate it, guys. I'm having this as your starting point. This is your initial structure high. I'm gonna answer your question in a minute, Samir. This as your outside return, pullback, retracement, whatever you want to call it. And this as your new structure high. And if you understand bullish structure, the bullish structure has 3 different rules that it must fulfill, right? 2 of the rules have to do with the outside return. So now we're in the process of creating another outside return. So this is an outside return. And this outside return has 2 rules that it must stick with for this market to continue being bullish. The first rule is the outside return of a bullish structure must come in and touch at least the 382 Fibonacci retracement. Now we can see the market has gone past the 382 Fibonacci retracement. So that rule has been fulfilled. The next one is the outside return of a bullish structure must stay above the starting point. In this case, the previous outside return, because this is going to become our starting point. So if this market, the market needs to stay somewhere in this zone, you would expect a retracement. So if you're a trader, if you were to go long in this market, like this is a perfect trader, you can go long in this market. Whoever is knows how to trade contraction and expansion. But I'm just trying to, tell you some, because one of the things, the most important thing about trading, guys, is the psychological part, the emotional part. And the only way you are able to control that, if you are alert, if you understand structure, if you understand where you shouldn't be, what trade you shouldn't be in. And this is very important, because once we get this structure, you can place a long trade here, you can buy this market. But the minute this market comes back down and break the previous outside return, the moment it breaks below this structure, you shouldn't be in that trade. And it's completely different. It's not like you're going to apply, don't apply this to this, because this is a totally different scenario. That's what I'm saying. Structure, this little key difference of breaking the previous initial structure high can change the whole behavior of this market. You need to be aware of that, guy, because if you, like I said, if you don't know the difference between these structures, which I just explained to you, you shouldn't be trading, because we're going to look at examples and you're going to see how the market behaves most of the time. I mean, we're not saying it's ever going to be 100% of the time. Nothing is ever going to be 100% of the time. Just, it doesn't work like that. But 9 times out of 10, you're going to see this kind of behavior. And one of the obvious examples I want to point out is on the euro dollar. We're still not getting anywhere with our day trading strategy. But let me have a look at the euro. I mean, this is not like the best example, but it is a decent example to show. So we have a situation here where we have a contracting file. Now, okay, this is different in terms of we do not have an impulse, like a bullish impulse like behind it. On contracting channel, they all behave in the same way. But looking at this contracting channel, this is one of the trades I posted on TradingView a while back, and this is how this market behaves. This is one of the reasons why there's a lot of retail traders or people that come into trading with no experience, and the moment they see this, or they've been told that when you see a contraction in the market, and when they've been told exactly which direction the market usually breaks in that contraction, and the moment the market breaks out of this contraction, a lot of inexperienced traders or people who are new to trading, they start buying because of a fear of missing out, because they know once the market breaks out of the contraction, it's gonna go in that direction. But here's what they don't know about structure and behavior of these kind of structures, the contraction. This move here only broke out of that contraction. It did not break out of the hole in terms of the initial structure high. Yeah? And look at what the market went. Straight back down, retest the structure, and it rises. This does not violate any kind of structure. This is just the way the market moves. I mean, this is not the best example, like I said, but we're gonna go down on a much lower time frame, and we're gonna find better examples, guys, and you can see. So I need to find an example with an impulse there, because we have an example here, but this is kind of similar to the one I just showed you, but I need to find an example with an impulse like so. And to answer your question, simply explain the perfect entry. The perfect entry on what exactly is your question? Huh? The perfect entry on which pattern? Because there's no such thing as the perfect entry in trading. I mean, you're hardly gonna get a perfect entry. So elaborate on your question, please. And for those of you that are just joining, welcome to the live chat. And I've just done a couple of analysis, and a very important tutorial on understanding the difference between these two structures. Because when I made my videos over the weekend, I did say that if you don't know the difference between these two structures, as a technical trader, you should stop trading right now and go on, just understand, or you can just rewind the last 5 minutes that I've been talking about these structures, because they're very important. As a technical trader, you need to know this, guys. And obviously I'm still keeping an eye on what's happening. I mean, I do day trading here, so let me just go on my daily day trading time frame, 5 minute or 15 minute chart, and Yeah, so the only potential trade I could be taking today with a runner strategy is going to be on the pound yen, and but we're way off from where I would want to be. I mean, the market is still around 60 pips away from my entry. So yeah, unless that happens on a Monday. I mean, Mondays are kind of 50-50, so you don't exactly know what the market is going to do. So I probably won't be taking any trade today, but we don't know. Like I said, Mondays are a bit, you never know what's going to happen. But in terms of any trade that anyone wants to take, on the pound US dollar, we do have a long trade, potential long trade, based on what I just explained in terms of this strategy. But obviously, if this is a trade that you're going to take, please watch the explanation of what I did on these two structures. I just explained it about 5-10 minutes ago. Watch it, because if you understand these two structures, then you're going to understand how you're going to approach this market. I mean, you're still going to take a long position, absolutely fine, because we're still this is a bullish structure, and the market at some point is going to reverse from this point. But as soon as we come out of this zone, we go below the outside return, then you should think about cutting your losses. Yeah, so let's see if we can do some more analysis on other currency pairs. So I've got dollar yen here. I've kind of already analyzed this in my forex market preview video, but the dollar yen, we're getting some kind of a correction here. Where's the triangle that I'm looking for? We're getting some kind of a contraction here. Correction is so far we got a 1 2 3 contraction. This is a 1 2 3 contraction the market has put in. And if you look at what comes before the 1 2 3 contraction, we had an impulse leg to the downside. 1 2 3 contraction. At some point you expect this market to break to the downside. Now we've already taken a short trade on the pound, on the dollar yen last week, and if the market does give me another opportunity to short the market on my day trading time frame, then I will be taking a short position. But this is just there's nothing too complicated about this, because even if you look at this market on a much higher time frame, if I put this on the daily time frame, you're gonna see a lot is happening. Again, it's just about reading structure. Look at what the market has done here. Look at what the market has done here. Moving nicely, creating higher lows. Yeah? Bullish structures, bullish market. Look at this move back down here. The market breaking previous structure. First sign of communication. I always tell my traders, I always tell my students, as soon as the market breaks a structure, that is the first sign of communication. It doesn't mean you should act. It doesn't mean you should take a trade. It means you just wait and observe and prepare yourself, because the trade is coming. Breaks the structure, retraces. Now we're probably going to get a bigger contraction here, who knows, and then the market will head down. The only way the market is not going to do that is if, let me show you how you can, is if this happens. So if you look at the current market structure, which I just showed you right now, you're going to see that we do have a mini contraction here. This is a nice contracting channel, contracting. A nice contraction here, which the market has broken out. We've broken out of that contraction. So this market could come back down to the previous structure, and we're going to get a rally. Right? Now that's probably going to happen. The next move of this market is definitely down. That's why I said I'm looking for a short trade on the pound yen. I look at this, like I said, and this could turn out to be another bigger contraction, a bigger 1 2 3. The fact that we've broken below these structures, guys, this is very, very important. This is key. This determines what's gonna happen. in the next phase of this market. But in terms of having an immediate trade today, let me drop this down to the 30-minute chart and see if we do have a potential trade that we can take on the pound yen. Um, Not really. There's nothing to. I mean, unless if you're someone who trades resistance and support. I mean, you're just gonna look at this structural level here, because it looks like the market has come into a little bit of resistance. But that's not a strategy that I mean, I don't trade that, because that's just too basic. I need a lot more reason for entering any trade that I take. But if you're someone who wants to take a trade, you can take that trade. But then again, I told you, these kind of strategies only work about 60% of the time. So if you're, yeah, I mean, the whole picture, that I know that the dollar yen is gonna head down at least to break this previous structure. So unless I have a trade on a daily time frame that tells me, on my day trading time frames, that tells me to short this market, I'm not getting involved. We don't have anything. We don't even have an advanced pattern. Do we have a potential cipher pattern? No, we don't have a cipher pattern. We've gone beyond the 1 for 1 extension. We don't have a cipher pattern, and we've only touched a 382 retracement. No, we don't have an advanced pattern on this one as well. So dollar yen, probably stay out, unless if you're desperate for a trade, then go for it. But I would stay out. Um, what else? Any other currency pairs, guys, you want me to analyze? Just put it on the chart, on the live chat, and then I'll go for it. So the next one, probably have a look at the dollar card. This is from last week. Let me get rid of this box here, and let's look at this on a much higher time frame and see what the market has been doing. Oh, this is one of the trades that I took with my traders, the advanced pattern, which ended up being a winning trade. We had a Gartley pattern, a bearish Gartley pattern here last week, 2 weeks ago actually, that we took the trade, and as you can see, the market, it gave us that win. So now the question is, what next for the dollar card? I mean, this is looking to be like a corrective pattern here. How do I know it's a corrective pattern? Because I look at what the market has done before. This is an impulse leg on a kind of a bullish market, but it's an impulse leg. Let me get rid of these triangles, and this is a corrective pattern. The market is forming a corrective pattern here. So it's kind of coming to a little bit of a consolidation. And if you know advanced patterns, then you know when it comes to consolidation, that's where you're going to find most of your advanced patterns. But if you want to even make it that your advanced pattern, if you want to take, and this is one of the things about trading, you have to be able to find, sometimes you have to be able to fine tune your trade, no matter what pattern, what strategy you're trading. Even though most strategies, they're only going to win about 50-60% of the time, you can fine tune your strategy to give you that little bit of an edge where you can win 65-70% of the time. And this is one of those cases. For example, if you see a market in a consolidation like this, that was preceded by an impulse leg. Now, you know, most of the time, this market is going to break in the upward direction. So what do you do anytime you see an advanced pattern, a bullish advanced pattern? Then you take the trade. Or if you're a structural trader, the market coming back to this previous structure will present you with an opportunity to go long. So I think dollar card, we're gonna be having a potential long trade this week on it. If you're a swing trader, there's gonna be a potential long trade on the dollar card, because these contractions, this flat contraction tends to break in the upward direction. So let's move on. And what else am I going to analyze, guys? I don't see you guys telling me what currency pair you want me to analyze, or any questions on the live chat. So I'm guessing you guys are all professional traders then. But anyway, looking at the dollar Swiss franc, actually someone did ask me to analyze this last week in the live stream, and I did say that, you know, this currency pair is heading to this previous structure low, and until it does that, you don't actually want to be involved. I mean, if you have any short trade on a lower time frame, then take it. um, but this market is coming to this structure because the market loves structures, and it's going to come and break these structures. But as soon as it breaks this structure, what it does after breaking the structure is what's going to determine how you're going to trade it. So dollar Swiss is all about waiting and seeing what the market is going to do. In terms of, now we don't really have anything apart from that is just a structural trading. Aussie dollar. Let's look at the Aussie dollar on a higher time frame. We looked at the market is coming down. Let's look at the 4-hour chart. Aussie dollar getting ready for another move down. You know, sometimes this trading, I mean, you can, if you look at the market on a glance, you can, if you understand structure, you will understand exactly what is happening. Again, this is a strategy where this is a structure that the market is putting, where these kind of structures, you don't know when they're gonna end, but eventually when they do, you're gonna get moved down. Because if you look at the market on a higher time frame, you've got a bearish market. This is a bearish market, and there hasn't been any time where, okay, we do have a potential time where the market has broken previous structure here. Yeah, so this is the reason why. So normally I will look at this kind of structure and tell you guys that 9 times out of 10, this is where the market is going to head down here. But then if you look at the whole structure of the market and see this is, the market doesn't do this by mistake. This is not an accident. The market doesn't go and break a structure and they say, oh, I'm just breaking structure for the fun of it. The market doesn't do that. This is a sign of communication. So this changes this whole structure. The outcome of this structure, it changed from 90% to about 65%. Now, we're not saying the market is still not going to break out of it. It might still break out of it. So yeah, if you understand structure, guys, a lot of it's gonna help you a lot with your trading, because your mindset, the way you're gonna look at structure, you're gonna know exactly if you're in a trade that you shouldn't be. It's gonna help you kind of adjust to, in terms of like cutting your losses quickly. I'm talking for those who trade. You need to have a, you need to, for those who do swing trading, that is especially for you. But let's look at what we're gonna look at next. Let's look at the Kiwi, New Zealand dollar, Australian dollar. We probably have, we do have a potentially same structure. Again, this is, I'm just looking at this. This is very, very dangerous, guys, because this market could end up, what do we see? Head and shoulders, right? Reverse head and shoulders. So yeah, the Aussie yen and the New Zealand dollar, that is a very, you might have to just stay out of that one, because you don't have a high probability trade. And you know me, guys, I only trade high probability trades. My day trading strategy, which you've seen the results, guys, is over what, 80% success rate, right? So let's check our day trading and see what the market, where the market is at. Yeah, we still haven't moved. It's Monday. I'm not expecting much, to be honest. I am not expecting much when it comes to Monday. So we'll see how this is gonna. But yeah, let's look at the economic calendar and see what the market is, what we've got coming up anyway this week. Like, I don't really care much for the economic calendar. It's just, since you guys are not really asking questions or anything, it's just something to kind of you know, distract me a little bit. But I couldn't care less unless I see interest rate decision on the or FOMC meetings. I couldn't be bothered. This does not, like I said, these are all noises, and if you understand structure, technical analysis, this is not gonna affect your trading at all. ECB's president making a speech. Okay. RBA meetings. Okay, Australia go. There's meetings. So I could potentially have good trading opportunities tomorrow on the Aussie pairs. And the Aussie pairs, they're pairs that I do trade, Euro Aus or Pound Aussie. Depending on how volatile that news is. If you don't mind, can you look at gold? Okay, I'll have a look at gold in a minute, definitely. Um, yeah, so the Euro Aus and the Pound Aus are currency pairs that I do trade. So there's potentially going to be a trade during the UK session tomorrow. Um, yeah, because this is good. I mean, this just gives me volatility, and in terms of any other, no, I don't see any other important um, pound. Okay, we do have inflation on inflation report coming up on Wednesday, but that again, I couldn't really care less. I couldn't really care less. There's nothing here the first 3 days of the week. But anyway, let's go back to the chart and analyze the gold that someone wanted me to, like Wale wanted me to analyze. Um, yeah, still a long way from our entry in terms of day trading. But let's look at gold. Let me get rid of my shaded areas. Gold on a higher time frame, straight away I look at structure. Structure is very important. We have some resistance here, and looks like the market is at that structural point. Yeah, so we haven't really broken, because there's a lot of things that you're going to have to look at here. First of all, you have to try and analyze the whole structure. The first thing you look at, obviously, as any trader with little or no experience, you look at the structure. You see straight away, you see that the market has come into a little bit of structure, and now you move on to the phase of analyzing the market in a much finer detail. So because just because we have a resistance here doesn't mean that this market cannot break and go above this resistance. The recent resistance doesn't mean shit. I mean, it means a little bit, but it doesn't mean too much. So we've got this structure here, but let's look at what the market has done here. We had an impulse leg here, right? And we have a corrective pattern, kind of a channel contraction here. And these contractions usually break to the upside, right? So we have the market coming out and breaking out of that contracting pattern. And if you remember my video on the pound US dollar I just showed you a few minutes ago, you're gonna see these structures every single currency, every single chart you look at, you will see these kind of structures. And if you don't understand what the market does when it breaks out of this structure, then you shouldn't be trading. So if you look at this previous structure here, the market broke out of this contraction. It did not go above the initial structure high, did it? So what did that tell you? That this market is going to come back down to the previous structure here, and then it's going to rally, and we can potentially break this resistance. If we had broken out of this structure, here, the initial structure high, if this move here broke out of that structure, then I would be expecting the gold to give you a considerable amount of retracement. It might come back, it should come back down, break the previous level, and then we're gonna head down. See this final detail, this small detail, and And when it comes to the market, it doesn't, the market doesn't make mistakes in terms of following its rules. And when people are talking about breaking a structure, a lot of people might say, okay, so what does break of structure mean? Does the candle has to close above the structure? Do you have to get a wick of the candle to listen? Any part of that candle that goes above or below a previous structure to the market, that is breaking a structure, because you have to look at price. People talk about prices. When the market sets an all-time high, a new time low, or whatever, that price of going over the previous price, the market knows what it's doing. So in terms of gold, I will be looking, gold is going to be a long, because we've come back down, we've broken this structure again. What I spoke on the pound US dollar, the fact that we did not go above this previous structure with this move here, this makes gold a long trade. So it's just a matter of time before we break out of this before we break out of this previous high, and then we continue going up. Because even on the longer term, if you look at this market, you're going to see this is a contraction. This is a corrective pattern here at the top of a huge bullish move. Now, am I saying that, this market is going to break out of this structure right now? No, that's not what I'm trying to say. But I'm just saying that the long term, if you're a long-term trader, you don't want to be shorting gold. You just simply don't. And this is the point where some strategies might work and some won't. Because if I look at this market right now, there are people who trade advanced patterns. I know that, because a lot of my students that take my advanced pattern course, they do trade advanced pattern. We have a potential bearish advanced pattern here on the gold, right? It's a bearish advanced pattern here, a bearish Gartley pattern. And $127, we're just moments away from our entry point. Yeah. Now, nobody's saying that this, if you take this short on a Gartley pattern, the only way this short is going to work on a Gartley pattern is if this market decides to consolidate more here. That's the only way you're going to take a profit from this. Hi Abdul Karim, welcome to the live stream. If you do have any questions about trading, then do put it in the live chat. So the only way this advanced pattern, this bearish advanced pattern, is going to give you a winning trade if this market decides to stay in this contraction a bit further. But the sign is already there. The fact that the market has broken, coming below this previous structure after coming out of a contraction here. This market is bound to just keep going higher. Again, so that's what I'm saying about fine-tuning your trading. If you're someone who understands structure, there's just no way that you can just learn one strategy and be successful at trading. It doesn't work like that. The first thing you need to do is understand structure. That's the most important thing. Understand structure, and then any other strategy that you learn, you have to use that in combination, because that's what's going to give you the edge. I'm not saying you can't trade it, just that you can just learn a single strategy and trade it. But every single strategy that you're going to learn is only going to give you about 50-60% winning ratio. And with 50-60% winning ratio, you have to be a machine to be profitable with a strategy like that. Because it's only machines that don't have emotions. As a human being, you can't be successful with a strategy that wins 50-60% of the time, unless you've had probably 10 to 15 years experience in forex, because the experience is what builds your emotional side, your psychological part. That's what's going to strengthen you. That's because you have to go through a lot of ups and downs in tradings, and then to build the experience. So when you talk about fine-tuning your trading, like I said, first of all, you understand structure. I'm an advanced pattern trader, but I wouldn't trade this. I won't trade this because I understand the structure of this market tells me that gold is bound to just keep going higher. Now, I'm not saying that taking this trade is not going to give you a winning trade. It could, because if the market decides to stay in this contraction, then we can stay here a bit further. It might come back down before it goes up. The market can do that. But whatever you do, if you're a long-term trader, don't be short on gold. And all because of this little detail. I mean, difference in price between here to here. From here, yeah, it's about 66 pips. Or 666, about 66 pips. That's the only difference. The fact that this did not go above the previous structure, and the fact that we had a contraction here, and the fact that these contracting patterns, they break in the upward direction. And we did get the break. But this break did not go above the initial. That is just a lot of things that you've pieces together. When it comes to trade, so many pieces together, you put them together, and then you understand the whole picture. So, Wale, to answer your question, I've just answered your question. I've just analyzed gold. But if you want to know what I think gold is heading higher. We do have a bearish advance pattern on it at the moment, and so take that one at your own peril, because it's more like 50-50 that the market might give you a win. But yeah, gold is definitely heading higher. Any other currency pairs you want me to analyze? Any questions regarding trading? Up with Kareem, you're just joining. Guys, yeah, let's make it a little bit more active, because I don't think Monday is gonna give me a trade today. I've looked at my trading. Yeah, we're not today is gonna be likely gonna be a dead Monday, but oh no, we'll see what happens in the next hour or so. Yeah, I'm not even close to anywhere I want to be. I'm still around 67-70 pips away from my entry, so that's not going to be probably not going to be a trade today. But yeah, so that was good. Analyzing the gold, I haven't looked at gold in a while. That's not a currency. I don't really trade gold, even though I know a lot of people do trade gold. But yeah, so you're welcome, Wale. You're welcome. Any other questions, guys, is welcome. Just throw your questions away. And any analysis you want me to look at. So why don't we look at? Okay, please, can we take a look at GBP yen? That's the currency pair that I trade. But you want me to analyze that on a much higher time frame, don't you? To tell you exactly what I think the market is gonna do. So GBP yen, pound yen on a higher time frame. I'm actually gonna put this on a daily time frame. Well, okay, so let's try and see this. The market is very it just never ceases to amaze me. First of all, I drew a line there, and I'm also gonna. I mean, first of all, if you look at this market on a higher time frame, we can see, it's bullish. I don't need to explain to you guys why the market is bullish. You understand bullish structures. You understand how the market moves. But this is a bullish market. I will tend to ignore this, because this is even though we did not break any structure, any important structure, but this was during the budget last summer, I think, when the UK tried to cut taxes, and obviously that's where we had this move back down. I think, if I'm not mistaken, yeah, around September last year. This is a news inflicted event. But looking at the pound yen, first of all, you don't want to be short in this market if you're a long-term trader or swing trader. But on the other hand, it doesn't mean that you're not gonna have. That's the thing. Every time you look at a market, you're gonna see an opportunity, a strategy that will tell you the market will go low, or a strategy that will tell you the market will go higher. Like this, there's always gonna be like this. It's always like this battle between That's if you know multiple strategies. Like right, looking at this right now, I see a strategy that tells me this market is gonna go low. I see a strategy that tells the market is gonna go higher. Because if I look up people who understand advanced pattern, we got a potential Gartley pattern, potential bearish Gartley pattern forming here, right? This is the bearish Gartley pattern. There's a bearish Gartley pattern here. So this is one strategy that tells you that the market is gonna go lower, but obviously we're gonna have to go all the way to around 168.88, which is still around 200 pips from the entry, right? But then you look at this market on a higher time frame, and you can't say anything but that the market is bullish. The market is completely bullish. So dropping this down to a 4-hour time frame, do we have any kind of indication as to where the market is going to head at next? We had a contraction here. A contraction here tells me that we could potentially be coming down low. Because if you understand how these patterns behave, every time a market forms this kind of structure, you know, I think all the analysis I've done today, you've seen something like this. That tells you guys, when it comes understanding contraction and expansion, its structure is the most important, and that should be your foundation as a trader. Because once you learn that contraction and expansion, any other strategy on top of it, just it kind of helps you with how you trade. Any other strategy, you know, comes from understanding how the structure of the market works. So we have a contraction here. Are we going to get a retracement soon? We are probably going to get a retracement soon, and that retracement will come back down to where this contraction is. And again, what I talked about in the pound yen, the market coming out of this contraction, breaking the new structure high, the initial structure high. Now, this is going to be whatever's going to happen here. You would expect this market to come back down and reverse somewhere before it gets to this previous structure. But understanding that the market has broken the initial structure high here, you know that if the market comes below this structure, then we're going to be heading down. At some point, we're going to be heading down. So the pound yen is a tricky one to predict what's going to happen, because I have a strategy, an advanced pattern strategy that tells you the market is going to head down. I have a contraction here that tells me we're probably going to come a little bit lower before we go higher. And on a higher time frame, I see a market that's completely bullish. The market is completely bullish. And even here, looking at if you just isolate this structure alone, we can see that we had an impulse leg here, and this can just be a bigger corrective pattern, which is eventually going to break to the downside. But when we say break into that, we're not saying that the market is going to completely change and go bearish. For that market to happen, for that market to be bearish completely, the market will need to come back down and break this structure here. It needs to come and break this structure here, because this is more like a bullish structure, and the market needs to break. So long term wise, I would say be bullish on the pound yen. However, short term, we do have a potential that the market is going to go lower, which is not really kind of it's not difficult to kind of understand, because if I've analyzed the dollar yen as well, and we do have a potential for the market to go lower on the dollar yen, because we've broken the structure on a higher time frame. And the dollar yen, if the dollar yen is heading lower, so yen is probably going to be the controlling factor in terms of where this market goes. So short term, looking for a short position, but long term, wait and see what happens when the market breaks on the market, what the market does. Because if it comes back down and break this structure here, then we're going to be heading down. But yeah, short term is a short on the pound yen. On the, dropping into the 1 hour time frame, we don't really have a chart on it. But on my day trading time frame, I could potentially get a trade today, which is I'm still around 60-70 pips away from it, and that trade is going to be a runner strategy. I might be going long on it, and depending on where the market ends at the end of the day, it might turn into extended runner strategy, which is going to be a short position. So I could be shorting the pound yen tomorrow. I could be going long today and shorting it tomorrow, depending on how the market behaves. So yeah, so that's my analysis on the pound yen, Abdul Karim. Um, what other currency pair am I gonna have a look at? I like the fact that guys, you guys are very engaging today, asking questions. I like this. This is how it should be. We come here to talk about trading, so we should only be really talking about trading. Any other currency pair anyone wants me to analyze, it doesn't matter if it's even if it's exotic currency pairs, some of the um what else can I analyze? Pound Aussie is a currency pair that I trade a lot. I'm gonna go, and obviously we got the Australian dollar. The minutes coming up tonight at 1 a.m. So we should be expecting some movement here on the pound Aussie. So tomorrow they could potentially have a day trading on the pound. You're welcome, Abdul Karim. Could potentially have a day trading as well. So any advanced pattern traders here looking at the pound Aussie on a higher time frame, we do have a bearish Gartley pattern. So we do have a bearish Gartley pattern, and I have to go look at the 127 extension. I think we're gonna go a little bit higher than that. Yeah, so we do have a potential bearish. This is on a higher time frame though, so the market is still about it's about 386 pips from our entry point. But those people that trade, but 386 pips is not a lot for a pound Aussie. Pound Aussie, they tend to move they tend to be very volatile, especially now that we've got the minutes coming tomorrow night. So we could potentially have a short trade on a pound Aussie, but in terms of that's long-term trading, not more of a. This is not for. It's not a day trading. I could potentially have a day trading tomorrow. We just have to wait and see. So why don't we take a look at U.S. oil and some of the U.S. indices. So U.S. oil. I know there's some people that trade U.S. oil, no? Yeah, there's some people that do that. The first thing, again, structure. I look at the previous structure. I look at where the market is. Look at the previous structure. That will tell me, that will just set my mind in terms of the general direction I think the market is going to go. Bullish market. Market hasn't broken any structure. The US oil is bullish. It's going to be bullish, and it looks like this corrective pattern could be ending soon as well. Because again, this is just a corrective pattern. This move down did not break the previous structure. The market could go higher. But now that we've broken out of a corrective structure, what do you expect? You can expect some kind of a retracement before the market continues, right? Any trade on the lower time frame? If I drop this down to the 1 hour time frame, again, looking at this market, if it's very, like, guys, if any of you guys don't know contraction and expansion, please go and learn about it, because again, everything the market does, every single thing, this is a contraction in a bullish market. I think we gapped here. I don't know when was it, last week or the week before market opened with a gap. Contraction. The preceding impulse or the preceding direction of the market determines where this contraction is going to break. This one, in terms of this one, the market will break to the upside, and that's what we're seeing right now. Again, if you understand contraction and expansion, would have been taking a long trade on this one. This is not currency pair that I trade, so couldn't really care less about what's going on the so let's look at the US indexes, like the Dow Jones on a higher time frame. How can I learn about contraction? I do teach contraction, Wale. I mean, if you're interested in learning contraction, I do teach it. But that's one of the my probably that's the expert. You know what? Just email me, send me an email on my website, and we're gonna talk. Maybe we can arrange something else, because yeah, I don't like, to be honest with you, this is the reason why my contraction expansion course is too expensive, is because it's a long structure with teaching you the basis of forex market. The structure is, it's gonna take close somewhere between 3 months before you complete the course, based on teaching twice a week. But yeah, like I said, we can just email me, and we're gonna let's talk about some how arrange something. Like I'm open to kind of negotiate on something. It's just that it takes too long to teach contraction and expansion. And but anyway, back to the Dow Jones. Again, looking at this market, you can see straight away, right, what's happening here. I drew a line there where we had a contraction, where we had a break of structure. But if you analyze what the market has been doing before then, so a nice smooth bullish market. In fact, this thing even started here. This line should be around here. This is bringing me back memories of Bitcoin, a prediction I done on Bitcoin in 2020. This is exactly the same pattern that we're seeing here, guys. Nice bearish move, and then the market breaking the previous structure. If I was analyzing this market a few weeks ago, I would tell you exactly, wait for the market to go back to the previous structure and buy it, because this is the first sign of communication. Yeah, this is never good. I'll show you this on Bitcoin, the same kind of structure. February 2020. For those of you guys that, I used to post on TradingView, and this is one of the trades that I always remember. Right? It's similar. It's all about contraction and expansion, and understanding structure, guys. That's what is gonna make you understand this. So we got this similar again. Look at by how much this market broke the previous structure. It's just by an inch, if you want to call that in terms of pips. That was just a lowered inch. But I knew from then on, so the market will come back down to the previous structure, and this is going to be the point where you want to buy. I'll bring up that prediction again, because I'll bring up that prediction again, guys, and I'll show you guys. Yeah. It's all about understanding contraction and expansion, guys. Contraction and expansion. It's not just that. There's so many other, But once you understand contraction and expansion, you have the perfect foundation to understand technical analysis. This is a trade right here, right? I even put a cheeky title saying if you can't see it, put on some glasses, because the break over this structure was very, very tiny. But this is the thing about the market. The market doesn't make mistakes. When the market breaks a structure, no matter how small the structure, the break of the structure is, it doesn't matter any part of that candle. It can be the wick, it could be the body, it can be anything. As long as that price goes higher than this, the market knows what's going to happen next. And 9 times out of 10, you're going to see structure like this. So many times, guys. So it's not like, people, when people talk about, structure, like, I always say that if you, whatever strategy you're trading, if you don't understand structure, whatever technical strategy you're trading, that strategy is gonna make you, because at the end of the day, you have to be able to, like I say, it's all about finding that edge, that little edge. Because if you don't know technical, or if you don't know structure, if you don't understand contraction and expansion, then obviously any other strategy that you trade, you can still be successful at it. But it's all about having that edge that is going to give you, because the higher the win rate of your strategy is, the better it is for your the psychological part of your trading. Like with my day trading strategy, I mean, I've done over 85%. But most strategies are like between 50 and 60%. If you understand contraction, you understand structure, that's gonna take your strategy from being from having a 50 to 60% winning ratio to about 70% or over 70%, and that's gonna make a huge difference, guys. That's gonna make a huge difference. Um, but anyway, I was looking at the US, the Dow Jones, right? And that's exactly what happened in this structure. And a lot of retail traders, a lot of people, this is the retail trader trap. This is the people with lack of experience. This is where they get trapped. They might maybe know what structure is, and this is probably going to tell them that, oh, the market is going higher, and a lot of people will buy in here. But this is the first sign of communication. I always tell my traders, the first sign of communication. When this happens, you wait. Because patience is important in trading. I cannot stress the importance of patience. And you do a lot, but by just waiting, by just waiting. You wait until the money is on the table and you just go and pick it up. That's how you approach trade. You have to have a lot of patience. Like today, I'm here. I normally do day trading. I normally stream. I think the last couple of weeks that I've been streaming, every single time you come into my live stream, you're gonna see me taking. I've had trades, but we're having today where, I mean, Mondays are usually 50-50s depending on how volatile. You don't really get volatility on Monday. Sometimes you do, sometimes you don't. And based on my strategy so far, there's nothing for me to trade, and all I have to do is just sit and wait. I could spend could get through the whole of today with no trading. That can happen. And this is what you need to do also when you are a trader, when you understand contraction, expansion, you understand structure. This will just make you wait. Because once we come back to this previous structure, the market is only doing one thing, it's only going higher. So we went higher now, put on an impulse leg, put in another contraction here, right? You want to guess where the market is going to break to? Of course we're going to go higher. Of course we're going to go higher. That's the only place the market is going to go, because the market has already done what it needs to do. It's already giving you the sign. If you missed it, it's not the market's problem. If you missed this sign, this is the sign here. This move that is about to happen the plan has already been set in motion as soon as the market broke the previous structure. The plan has already been set in motion time ago. And it's important as a trader, so when you're analyzing the market, you're looking at the market, always look left. Like structure always will give you a clue as to where the market is going. So let's look at, guys, if you want me to analyze any other currency pair, any chart, just put it on the live chat and I'll have a look at it. If not, I'll just be picking, currency pairs at random and just analyzing them. So looking at the Nasdaq as well, which is probably going to be similar to the US 30, maybe not. So looking at the Nasdaq, this is I wasn't expecting to see this, but it looks like the Nasdaq is going to be the market hasn't given us anything yet. See the way I'm following this market? It's all about looking at the structures. There isn't any communication, no sign that the market is going to continue going up. So you just follow structure. That's the next move of the market. Unless, in fact, that is the next move of the market, whatever happens. However, if the market extends and break this structure, then this changes the move from this to this. Yeah, structure, guys, structure. I will never stop stressing the fact that you have to understand structure, the language of the forex market. If you're a technical trader, understand structure, because that's the only thing that's going to save you. That's the only thing that's going to help you get that little edge that you need to go to that next level. If you don't do that, you're just going to be stuck in a like I mean, every trader has been there. I've been there myself, where every single strategy you learn a strategy, and then you back test it. Everything is looking good. You start trading with it. You become very successful at the beginning, and then you hit a rough patch, and then yeah, it all comes crashing down. And then you go back seeking more knowledge, learn another strategy. It just the circle just keeps repeating. But once you understand structure, once you have a proper foundation in structure, contraction, analysis, and expansion, then it makes it a little bit easier, because it gives you that edge. Because it's a good thing when you're trading. You place a trade and you lose a trade, and you analyze that. You analyze the trade that you've lost, and then you realize that this is the mistake. You made that mistake because the structure tells you know exactly what you do. Because when you're in that at that point, then being able to cross over to the other side, where you're gonna be more careful in terms of how you trade, is gonna be is important. So looking at let's look at Bitcoin then, since nobody wants me to analyze any currency pair. But let's look at Bitcoin. Oh, Bitcoin. This is something very interesting is happening on Bitcoin, guys. Now you see me do a lot of analysis. What do you think I'm pointing out to in terms of what I think the market is doing right now? This is a bullish structure, right? That is a bullish structure. What do we know about bullish structures? In fact, I'm gonna get rid of this first of all, and let's talk about bullish structures. We have a bullish structure right here, and if you understand bullish structures, if you understand structure, this market should reverse at some point above the previous structure, or in this case the outside return. Actually, I'm gonna bring in my Fibonacci to know exactly. So we have the starting point here. This is foundation of structure. Whenever any one of my students, when I start teaching them about structure, this is the first thing I always teach them. The first thing I always teach them is the bullish structure. That's the first lesson 101. And from there on, just everything just builds on top of it. That's how you get to a point where it starts small, and then before you get to the point where you start talking about contraction and expansion. But this is the basis, this is the foundation. Outside return, retracement, pullback, whatever you want to call it. Yeah. New structure high. And to understand what a bullish structure is, there's 3 rules that the market sticks with. And those 3 rules, 2 of them have to do with the outside return, 1 has to do with the new structure high. For the outside return, this is the 2 rules that this market, and the reason why the market has rules is because every single time you look at a market, you look at any structure, you're hardly going to find a structure that's exactly the same as another structure, or you're exactly going to find anything that's symmetrical, that's perfect. But that's one of the things that teaches my students a lot of the imperfection when it comes to trading. Trading, the market only cares about rules. It does not care about how pretty or how beautiful a structure looks. And that's why these rules are so important. Outside return. The outside return of a bullish structure. The first rule of the outside return of a bullish structure, the market must retrace to the 382 Fibonacci retracement of the previous impulse leg. So now, obviously, at this point in time, we're looking at this to be our new outside return. This is going to be our starting point because we're looking at this structure now, where the market has gone up and goes above. Because if we're trying to look at this structure before we get to this point, this outside return has to come into the 382 Fibonacci retracement. And we can see the market has come into the 382 Fibonacci retracement, and this outside return needs to stay above the starting point, and we can clearly see that the market is above the starting point. So what we're saying ineffectively is the outside return needs to be within this zone. Anywhere within this zone, we have a valid outside return. So now we move on. Once we find, we'll move on to the new structure high. The new structure high, the rules of the new structure high. The market needs, any part of the candle of the new structure high needs to go above the initial structure high. No matter how tiny, no matter how little. That's why sometimes you're going to look at the market and you're going to see something like this. After learning what bullish structure is, you're going to look at the market and you're going to see something like this. And you're going to see something like this. Sometimes you're going to see something like this. To the market, all these 3 structures are exactly the same. They're exactly the same. To the naked eye, you might look at this and say, oh, they don't look the same. But to the market, they do, because it's all about rules. As long as the rules of this outside return and the new structure high have been met by the market, that's all it cares about. The moment you have this, the imperfection rule, the moment you know this, the moment you understand it, now you move on to the next one. The outside return, the market needs to stay above the starting point, and it needs to touch the 382 retracement of the previous impulse leg. So in this case, from the outside return to the new structure high, we got the 382 retracement, and the market needs to stay above the outside return. If the market is to maintain the bullishness, if the market is to be bullish, this is what it needs to do. So that tells you that if the market breaks that rule of the outside return, then it no longer doesn't want to be bullish. It wants to be something else. That's the first sign of communication. Yeah? That's the first sign of the communication. And we saw what this market did. The market came back down, broke the previous outside return. So the market is trying to tell you something. It's just up to you if you're going to listen. But because you're going to see people out there that are telling you, oh, Bitcoin is going higher, Bitcoin is going. It probably is. But if you understand structure, then you know that We've already broken the previous outside return, and the moment a market breaks a structure, and I always keep saying this, when a market breaks a structure, it takes a pause, it retraces a little bit before it continues in that direction. So if you were to ask me about my analysis of Bitcoin because of breaking this structure, we're gonna get a little pullback, and then we're gonna continue going down. That's what structure tells me. And you can, and I'll look at so many structures in the market, and I'll show you exactly where the market did how the market behaved in this similar manner. So guys, structure. I will never stop stressing it. Learn structure, understand contraction, understand expansion, because every single thing that you're gonna see in the market on the chart, you can be explained by structures. You can explain it using structures. Yeah, just checking the markets. Yeah, I don't think I'm gonna have a trading day trading during the UK session, so I might stream the US session. But I'm glad that we've done this session, because this is a lot of just analysis that we've kind of gone through it. I mean, there's still so many currency pairs that I could take a look, unless anyone wants me to take a look at a particular one. Should we take a look at the Euro Yen? Euro Yen. Okay, so you see, you look at this structure here. First of all, you just try to, the first thing you always do is just analyze not just looking at the big picture and see the market. Okay, market is bullish, but focus on these little pullbacks, little structures. Just focus on them and try to understand, is there anything that doesn't look right? Because you have to remember, like I said, always remember the law of imperfection when you're looking at this market. No structure is going to be the same. You can see this one. Look at, we have an impulse leg. We just came a little short retracement. Very, very little retracement. But where did the retracement come into? The 382 Fibonacci retracement, right? To the market, that's enough. As long as it stays above the starting point, the market has fulfilled that rule. And then we move on to the next one. Created a new structure high. Now we've got a bullish structure. Again, this retracement comes back down. Look at where it came back down to. Very, very close to the previous outside return. But the market is very smart. I'm not breaking it. If I want to stay bullish, I'm not going to break it. If I break it, it means I'm going to go in another direction. But look at this retracement and this retracement. Completely different, right? I saw a question earlier on the chat. Someone said something about perfect entry. So this is one of the reasons why you can never have a perfect entry. You can't have a perfect entry in trading. Because this, in terms of, for example, when you look at this, the market gives you a range, like outside return, 382 retracement above the starting point. So where you gonna go long on the market? It's more of a, I wouldn't say guessing game, but it's more of the fact that if you know exactly the rule of the forex market, then you can trade it accordingly. So next move, we'll move back up, new structure high. New structure high, followed by a retracement that came deep, but it did not break the previous structure, right? Because we got the previous structure here. What's the next move of the market? New structure high, and look at how deep this retracement came. Just look at how deep the retracement came. It came almost, it's probably on exactly the same price as the outside return. But remember, our rule is the market cannot extend beyond the starting point. There's a lot of kind of, let me just delete this thing to have a look at. I know we definitely did not break, definitely did not break it here. So we did not break it. Yeah. Retracement right on the starting point. And then now we're starting to move higher. So what you might notice is the market formed a contraction here. Yeah, we have a contraction here, and the market has broken out of that contraction. So we're gonna see what the market is gonna do, whether we break the previous high or not. Because if you break it, then we know exactly where the market is gonna, what the market is gonna do. I've already gone over that with you guys. But yeah, so guys, if you do have any question, I always say that just put it in a live chat, because I don't know what currency pair I wanna look at now. Yeah, I don't know what currency pair I wanna take a look at now, because what else? Let's look at some of the really exotic ones, like the pound Swiss franc. Pound Swissy. Let's see. Again, have a big picture. Look at the market on a bigger picture. Yeah. Because if you look at the market on a big picture, then you will know exactly what you're dealing with. Impulse leg, retracement. Impulse leg, retracement. Another one, retracement. Another one. See how ugly this looks. This does not look nice. But for the market, that's keeping it, sticking by the rules. Now we're getting a retracement here. Comes back down. The market broke the previous structure. This is another retracement here. And this is the thing about this kind of retracement. So now we're at a point where the market has fulfilled the first rule of the outside return. Yeah. I remember when we talked about the rule of the outside return, this is the two rules of the outside return. 382 Fibonacci retracement, and must not go beyond the starting point. So the market is free to retrace into any of these zones. And the market is probably going to do it, because right now, if you look at the current structure of the market, we're seeing a contraction, right? This is a nice contraction. Contraction that was preceded by an impulse leg. This contraction at some point is going to break to the upside. But whenever, even if it breaks to the upside, the market is going to stay within this zone, because this market is bullish, bearish on a higher time frame. Now, it doesn't mean that, you know, this does not mean this contraction. Yes, this contraction is going to break to the upside. If you're not, again, this is where you combine structure and a lot of different strategies. This will break to the upside. Yes, this is a contraction that breaks to the upside. But is it going to break to the 100? Is it guaranteed to break to the upside? It's not a guarantee. Simply close to the market. The market has already fulfilled the rule of the outside return. So you're not going to be surprised if this market decides to continue going down. I'm not going to be surprised about that. Even though as a trader, that's what I'm saying, you're always going to find strategies that contradict every trade you're going to take. Like, this is a must. There's always strategies, various strategies that are going to contradict what position you're going to be in the market. But when you understand structure, nothing is really going to surprise you, because it's going to just make your odds. You're going to learn to pick trades that have a high probability of winning than losing. Because yes, I understand contraction and expansion. Yes, I trade contraction and expansion. But if I look at this market as a whole, will I be taking a long trade? Probably not. Probably not. Because I know that's going to decrease my winning percentage, right? My winning ratio. So pound Swiss franc. Let's drop it down to the 4-hour chart. And see, it's a wonderful contracting pattern. Wonderful contraction. I've seen contractions like this, and I can show you an example of a contraction like this that broke to the upside. But whether that market had the same structure like this one on a higher time frame, and these types of contraction, usually the longer the market contracts, the bigger the breaks to the upside that is coming. Yeah, and I can show you an example of this. Let's go to the dollar yen, and I'll show you the example of that contraction. Dollar yen, daily time frame. Yeah, but this is a different type of contraction. So you see this contraction? See this contraction, guys? That was preceded by an impulse leg. If you look at the whole structure of the market, this is an impulse leg. This is our outside return. So even if this contraction were to come back down, even if this contraction was to come back down and break this structure, if you understand structure, if you don't understand technical analysis, if you understand contraction and expansion, I don't think you would panic, because this outside return, remember, it needs to stay above the starting point, and we can clearly see we've touched this 3 with Fibonacci retracement. You have a whole zone here where the outside return is free to go, because we haven't created a new structure high. We haven't created a new structure high. But these types of contraction, I'm going to show you so many charts like this where the market just breaks to the upside. And the longer the contraction is, the bigger the break that's coming to the upside. Let's look at how long this contraction took. It took 1,536 days. That's about 5 years. See a contraction that took 5 years, and the break to the upside that took less than 2 years. 503 days. This is what you're dealing with. Why don't I show you another structure like similar to this? So this, if you're a long-term trader or swing trader, I cannot stress the importance of understanding structure, contraction and expansion. I just cannot stress the importance of that, guys. Whatever you're gonna do, whatever strategy you're gonna, don't first of all, just understand structure, understand contraction, expansion, understand that, and then any other strategy you learn on top of that is just gonna make your trading better. So let's go to GBP CAD. This is another one that had those kind of similar structures. Yep. We had a similar structure on the GBP CAD a while back. And the good thing about this contraction and expansion, like, you can apply this to anything. Especially, I don't know if you guys, if you trade stocks, if you look at some of the charts, a lot of them have this kind of patterns. A lot of them. Impulse leg, contraction. Contraction that lasted how long? (1,107 days), nearly 4 years, right? And a break to the upside that happened in less than 2 years. This is even less than a year, 193 days. Less than a year. The market rose by 2,628 pips. And look at what happened. Funny enough, as soon as the contraction finished, as soon as the move finished to the upside, we had another contraction. See how the market moves? This one took a year, and then we broke out of it. And now the market is coming down. Let's look at where the market is at right now. And the funny thing, this market has been bearish on a weekly time frame. We have not done anything that violated any bearish market rule, right? Nothing. Even with this move that we had, we did not violate any rules. The market now has continued, broken the previous structure, so we're heading lower on the pound card. Okay, so yes, I'm not gonna be getting my day trading today. Let's drop this down to the daily time. Unless you people put any questions in the group, in the live chat, then I'm not gonna be doing any more analysis. Let's just look at what the market is doing. And so my day trading, instead of getting a long trade, I might be getting a short trade. Is that what the market is trying to tell me now? Even that, I can't get that. I cannot get that. So there's not going to be a trade for me on the... No day trading for me during the UK session. This isn't happening, so and live stream will be ending in about 40 minutes, guys, and maybe I'm gonna stream the US session as well. Or I might have a trade on the US session, but I don't know yet. And why don't we take a look at the Yeah, guys, I'm keeping an eye on the live chat. If you don't do you have any questions, anything you want me to analyze, put it on the live chat. I think I've analyzed pretty much. I've analyzed a lot of currency pairs today. And if you tune in, obviously to watch me day trade today, unfortunately I don't have any trades that I'll be taking today. Probably during the US session, but we'll see. Okay, guys, I don't think there isn't much happening. Um, since we don't have anybody asking questions or anything, I think I'm gonna end the stream now. Obviously, we'll see during US session whether I'm gonna stream or not. Because it's looking like the market it's not gonna be that volatile today, and since I don't even have a trade open, I don't see any point to just um, yeah. So I'm gonna end the stream now, guys, and I'll definitely see you again tomorrow morning, 7:30 UK time, and I may or may not see you during US sessions today. Okay.